what's going on, guys? Here, Jeff here, back again with another video because we have to talk about the market. Alright, so the market just pulled off one of the most dramatic mood swings that we have actually seen in months. And in the center of this whole entire story, we're not even going to be talking about Bitcoin and Ethereum, even though they are dropping by 5 to 7%. We are going to be talking about the Japanese yen. Yes, the currency that people often forget until they simply can't. Now, let's talk about what actually happened. And this is going to be the Japanese yen carry trade. Now, this is something that is often talked about in the markets, especially with all the narrative in the room, right? The Japanese yen carry trade is talked about often due to the fact that the interest rates in Japan is fluctuating by a lot. And in the recent times, you're seeing interest rates movement in the Bank of Japan happening a lot more often. And one of the biggest quiet forces powering global risk assets is starting to unwind as we speak. And whenever this actually happens, crypto reacts harder than almost anything else due to it being one of the most risk-on asset, and at the same time being an asset that's being traded 24 hours of the day. Now, in simple terms, investors basically have been borrowing yen at an ultra low interest rates, converting them into the dollar and throwing that money that they borrowed into higher return assets like equities, tech plays, and you guessed it, crypto. This is the carry trade that a lot of people has been talking about. And of course, this has been going on for years due to the fact that Japan has always been giving very, very competitive low rates for people to borrow from. And a lot of people basically just borrow the Japanese yen and just buy bonds in the US. Getting a easy 1 to 2% return is all they want to begin with. Now, but this week, something actually happened, right? Because we got comments from the BOJ, which is the Bank of Japan governor, Kazuo Ueda, hinted that Japan might actually consider raising rates. Now, this is going to be similar to how when Jerome Powell talks about a possibility of raising rates as well. Now, this tiny shift is enough to send shockwave across global markets. Even though it's not going to be huge, a 25 basis point is enough to scare markets away. Because if borrowing costs in Japan goes up, the carry trade becomes less attractive. If I'm going to be borrowing yen at only a 0.4% difference for me to make a little bit, there is no reason for me to make that kind of risk over such small returns, which means that the carry trade just loses its value. And when that happens, people start closing their position fast. And we all know with fast closing position, it means a margin is going to get called for a lot of people. And few videos back, I also talked about how people are borrowing the most amount of money they've ever been. And this is where it gets a little bit iffy and scary, right? Because a lot of people have been borrowing money. A lot of people are in margin, which means that every single time we have such high liquidity event crashes, we are going to see a lot of margin movement moving out of the market. We're going to see margin calls on astronomical level. And this is exactly what we saw last night for Singapore, at least, right? So investors, the unwinding yen-funded position means that they are selling their risk assets and buying back the yen to repatriate their capital. And crypto being the fastest moving asset, also the most leveraged playground in the system, took the biggest hit almost immediately, right? We saw Bitcoin dropping close to about $85,000 or so. And that, I think, in the early Asia trading market, we saw 85,000. And a lot of people were thinking that it might even go lower. Right now, it's starting to rebound a little bit at the 86.7 line. Ethereum tumbled down more than 7%, close to 8%. Altcoins basically got wiped out left and right. It's all happening all over again. And the funny thing is, this is not even a retail panic. It's not because people are mass selling due to some panic that's happening. It's not. This is all just structural pressure. People are being sold out of their position because they were forced to. Margin were at play. The domino effect powered by macro flows. So think of it this way, right? The yen carry trade is one of these pipelines supplying liquidity to global markets. And when this pipeline kind of squeezes, the liquidity just disappear. And crypto feels like that contraction instantly because the ecosystem itself relies heavily on leverage and high beta flows and the behavior of traders. All these are going to be very, very important to how the ecosystem of crypto work. And when liquidity dries up at that level, the entire market just becomes extremely fragile. Now, here is the smarter angle that I like to look at, right? Because I don't think that this is going to be a one-day move. Because if Japan genuinely start to shift towards the tightening, the quantitative tightening move, which is increasing interest rates, then the carry trade could actually shrink over the next few months, which means that the global risk cycle, as we are looking at it, might become more and more volatile. And there's going to be sudden bursts of selling as investors start to unwind their position built on the cheap yen liquidity that they have been enjoying for the past few years. So this is a macro regime change, right? So I don't think it's going to be just a bad day for Bitcoin. However, I do strongly believe that the people who are interested in buying Bitcoin regularly and in lump sum would still be doing so, which means that the buying pressure is not completely wiped out. It just means that there are now going to be sudden bursts of selling pressure coming into the market as well. So the question now is, what is this going to mean going forward? Because if the BOJ continues to talk tough, giving us very hawkish outlook, I think that you can expect crypto to remain hypersensitive to the yen movement. A strengthening yen effectively means the tightening of the liquidity for risk assets globally. A weakening yen would mean that the liquidity loosen again and flows return back to the charts. And Bitcoin becomes this macro barometer, not just as a speculative asset, but a reflection of global funding conditions. So yeah, if you are a long-term investor, this environment is actually where the opportunity is going to be hiding in, right? This macro-driven dips often overshoots. And especially in crypto, right? When leverage position get flushed out due to margin calls, fundamentals don't change. If you believe in Bitcoin or you believe in Ethereum, nothing changes here. It's just liquidity, right? Assets are just switching hands. Liquidity is the only reason why this is moving. If your fundamental still stays the same, nothing changes actually, right? So historically, these flush outs have created a lot of strong medium-term entry points for disciplined buyers. People who are buying in every single month, good for you. You just got a very, very nice in. For traders, I think just look at yen. If you're not looking at the USD JPY, put it on your trade view ASAP. You want to be looking at your USD to JPY, because when the yen strengthens sharply against the dollar, it simply means that crypto is going to be falling even harder. It means that the yen is getting stronger. People are getting rid of their assets that they borrowed the yen to invest in. Hence, they have to return the yen. So, of course, when the yen weakens, you're going to start to see a little bit of liquidity trickle back into the market, slowly coming back to make markets breathe more freely again. So, of course, this is one of the cleanest cross-asset signal in macro right now. Apologies. Now, for the narrative people, this is a reminder that crypto doesn't move in a vacuum. A lot of people kind of have that kind of mentality. Even the wildest digital assets are tied into your old school macro plumbing. Don't think that just because you're trading into Bitcoin or Ethereum, you don't have to look at all the other macro assets that's moving at the moment. Sometimes the biggest move in Bitcoin can actually start from something as small as a central banker in Tokyo just talking about, oh, maybe the interest rates might be going up this month. And that's all it takes. So anyway, if you found this useful, hit like, hit subscribe. Follow me on my Instagram because I do have regular updates on it. And, just follow along as I keep on trying to break down all these global forces that shape your portfolio. Anyway, thank you guys so much for watching. I'll see you guys in the next one. Peace out. Bye.